Hey doing, guys, welcome back to Invested Intelligence. I'm your host, Bruce Lee. Nope, wrong place. Bruce Lee. Got to be water, people. I'll give it a few minutes, let everybody come in, and then we'll start tearing down Bitcoin, making the case for bearish movement to the downside. Doesn't mean I'm right, but I want to talk about a little, I want to talk a little bit about a few things today. I want to try to get a little bit more of an understanding as to what it is that we're seeing, and then hopefully should give us an indication as to whether or not the next 3 to 6 months, and we have to give it at least 3 to 6 months because we have the lagging effect of some things that are, that basically that are happening now, and then obviously, these kind of the lagging effect of this comes in, 3 months, 6 months time, depending on what it is. Where's the hammer? Excuse me. Yeah, man. I'm gonna get one of them big Thor hammers. You start smashing. But I've got a sponge one downstairs that I used to beat my kids with. And before anybody says anything, we were playing, right? I've taught my kids how to, how to fight, how to do arm bars, how to do half guards, how to do, how to grapple on the floor and so on, man. I don't mess around. I want my kids to know exactly how to defend themselves, so it's all good. But yeah, Staked is in the house. So yeah, all right. Look, we've got a lot going on, right? And before we get into all of this, obviously, don't forget to like the stream. Maybe halfway through, I'm going to get you guys to kind of refresh the stream. I don't know if you guys know the Spiffing Brit, but he actually he's really, really good, and he kind of messes around with stuff and tries to break things. And one of the things about YouTube is if you kind of refresh the stream, it pushes it back out there. It's actually quite interesting. And he did this test where, and he's got a lot of subscribers, and he really pushed the count up, and then he spammed the chat and everything went nuts. It was crazy. Really, really cool to watch, to be fair. Really long though. It's about an hour and something long. In fact, no, it's not. No, it's not. It's about 4 hours long, I believe, if I remember. And I just had it on 2-speed in the background. It was pretty interesting. George, how you doing, man? They've got to know who's boss before they're bigger than you. Yeah, man. Yeah. My kids are really strong, man. They're strong, very strong-minded, very strong-willed. Thanks to God, can't complain. So let me just move over to the actual chart. I can't see the chat at the minute. So the case for bearish Bitcoin, right? We're going to start with the kind of hype thing, right? One of the things that we all, at least I feel that everybody, understands and knows, is that the more we start to see this kind of hype train, FOMO, emotion, everything that is basically part of the masses losing money, right? So what I mean by that is everything that is involved with, the herd losing money, the masses losing money, or at least the majority of people losing money. These are the things that we need to focus on: hype, emotions, FOMOing into, projects or coins or tokens or stocks or whatever it is, right? Or we'll just say the market's FOMOing into markets. These emotion-driven reactions are generally, or at least the general consensus is, responsible for people losing money, right? And we're seeing a lot of that now. It's really, really starting to ramp up. And I try to look at, say, for example, my Twitter feed, and I say, all right, look, I'm just one person out of hundreds of millions of people that use Twitter, right? And as such, my feed is going to be, predominantly about cryptocurrency. So we need to separate that as well. We need to say, okay, look, I'm only looking in a very tiny window, and seeing this kind of FOMO ramping up, right? So it's not just enough for me to see it. We need the masses to see that as well, and then start to engage in cryptocurrency again. I believe we're seeing that, right? If I just go to my Twitter feed for you, just as a quick example, final date for removing legacy blue chip. Okay, that's fine. And I'll just have a quick scroll down. We've got this guy here, crypto, right? Crypto. This is in French. For those that read French, I do. Crypto Phil, he's over at Swissborg. But again, I mean, this is basically just saying that he received some CHSB, but sort of Bitcoin, crypto, crypto toast, you know, crypto, head in, you know, basically for me, it's all crypto, news, markets, and so on, right? So I have to remember that this is just my view, but I believe that this is becoming the general view for a lot of people. And because that's happening, we're starting to see this kind of engagement. You guys will know about Ethereum, the Ethereum Shanghai, you know, upgrading some of the things that you know, they've got going on there. Obviously, this kind of really strong push for, oh, all of the staking is going to be available. People are going to unstake. People are going to dump it on the markets, this and that and the other. And I was just kind of looking at Ethereum and saying it's really not going to do anything, to be honest. It's probably just going to sit there, right? Which is exactly what we've seen on Ethereum, right? So we have to remember that as we're looking in this general overall market view, that we're not just taking our own personal views and saying, okay, I'm seeing this, so that must be the case. We have to see it across the board, and I believe that we're seeing that. So that's the first thing. The second thing is, so if we go back to Bitcoin, is we're seeing this kind of really nice run to the upside, right? We've had, you know, maybe 100%, 110%, you know, from these kind of lows, you know, lows here. And if I just go to this chart, I was calling this 30K to 32K level because it's that draw on price. We're seeing this really nice stability here. And if I just kind of zoom in a little bit and just show you guys what I'm talking about, we've basically seen a drop, stop run, right? Then we saw the reversal, negation, and then we saw a pullback, pick up a buy side, a little bit of rebalancing, you know, and then a pop, stabilizing, pop, right? And because of all of this, what we're really seeing is, believe it or not, a distribution event to the upside, right? So we're seeing a rallied distribution, right? We're not seeing a rallied bottom, meaning an accumulation of Bitcoin. One of the things that I said recently in a tweet was there is, and this is such an important thing to discuss, right? For the case of Bitcoin being bearish, right? The majority of people around the world simply don't have enough money to invest in Bitcoin. They just don't. You know, you may get some stackers who are accumulating, you know, small amounts of Bitcoin over time. They grab a little bit, you know, with the money that they make, maybe on a monthly basis or a weekly or sort of, you know, fortnightly basis. And then they'll take a little bit of their wages or their salary, put a little bit in Bitcoin, take that offline, stick it in, you know, in cold storage and forget about it, right? So there are plenty of stackers around the world, but not enough individually or even collectively, I believe, to affect markets, yeah, or at least Bitcoin in this case. There just isn't enough, because collectively, let's say, and I'm going to throw some numbers out there off the top of my head, let's just say there are 1 billion investors in Bitcoin. You know, 99% of those investors, right, you would need to get all of those tiny pieces of Bitcoin to all move the market at the same time. And it's very unlikely that people are going to be selling, you know, to create this downward pressure on Bitcoin or to create upward pressure on Bitcoin. There just simply is not enough money there for starters. And there just simply isn't enough people doing the same thing at the same time to really start to drive markets, right? And this applies to across all markets, right? Let me just quickly go back to the chat just to see what's happening. Fantastic. Awesome. Right. So let me get back to the chart. So there isn't enough. But if you take that last 1%, the Michael Saylors, the Bitcoin miners, the big mining farms that are making hundreds and hundreds of thousands of dollars a month in Bitcoin mining. You know, the big players in terms of institutional investors, you've got, you know, some regional banks, which unfortunately have been closed down. Those assets have been seized. And that's not all banks, but you're seeing regional banks across the board that are basically being attacked, especially if they're crypto friendly. You know, those funds are being seized. Those funds are then being held in custody, you know, by government agencies. And ultimately that's either going to be used, you know, at their behest, or it's basically just going to be dumped on the market and sold, or it'll just be OTC to some larger player like it always is, right? So the end result is still the same. That 1% controls a massive supply, you know, in terms of Bitcoin. And ultimately, we have to think about history, and we've got to think about the way the majority of the people that hold Bitcoin are emotionally, and what their aspirations are, their dreams, and what it is that they think Bitcoin is going to do for them. But then we've also got to look at that 1% and what we think they're going to do, because they're the only thing that matters. If 1% dumps their Bitcoin on the market for profit, Bitcoin's going to really just tank effectively, right? We know Bitcoin's being attacked left, right, and center. There's an argument to be made that Bitcoin is being mass adopted. No, it's not. You know, there's an argument to be made that Bitcoin is basically going to be you know, the world reserve currency. It's going to be the currency that, you know, the people's currency, all of this stuff that kind of creates this utopian society, right? We've already seen many examples of this throughout history, and Bitcoin really is no different. The idea behind Bitcoin is no different. The technology behind it is obviously very different, but again, this is something that we need to take into consideration. And then we start to look at the technicals, right? And we see that if we just take a zoom out here and we just go to the monthly chart for a second, right? So here's the monthly chart, and we see this kind of run up, it comes back down. A run up, explosive move comes back down, explosive move comes back down. And generally in cycles, what you tend to see, if we're just going to go pure technical analysis, nothing else, no analysis, no distribution events, accumulation, liquidities, all of this stuff, put it all to one side, we're just going to look pure technical analysis, right? What do we see? We see an impulse to the upside, right? And then we see a pullback. We see another impulse to the upside, creates a new all-time high. This one basically takes out all stops. So people that were really pushing at this point, that was a great opportunity for exit liquidity for some of the larger institutional players and some of these massive whales. And then ultimately we see this drop. And I won't bother basically putting this small rally in here. You know, so we see this drop here, and then basically we're seeing another little rally, and then ultimately in this kind of full cycle, right, of accumulation and distribution, and this is pure technical analysis, we should see a move to the downside, right, to the point of impulse. This is generally what should happen, right? 1 second, just take a drink. So this is generally what we should see happen purely based on technical analysis. Now let's start to break this down in terms of actual accumulation and distribution. And we'll do it on the monthly chart. So we see that basically we had the impulse here, right? And this really started to drive price higher. There was absolutely no stopping this. It wasn't like an accumulation and then a, you know, distribution, accumulation, distribution on the way up. It was literally, this is purely emotion driven, an emotional driven market. Put aside the fact that it's Bitcoin, that it's blockchain technology, that it's cryptocurrency, and just think pure emotion, and just think pure investing emotion, pure hype, pure FOMO, all of that sort of stuff, right? So the first initial stage of impulse is where all the big money starts to move the market, right? They start to push, and you've got to think. Don't just say, well, there's an impulse, momentum starts to build up, FOMO kicks in, people get excited, loads of people that are posting on Twitter, YouTube, Bitcoin. If you remember back then, it was 100,000, 200,000, 250. We heard all of these stupid numbers, right? It was 77,000. There was an 89. There was 100. There was 250, 500,000, and then there was a million and 1.5 million, right? These were all the stupid numbers that apparently Bitcoin was going to hit at the time. Now, obviously, there was a few very smart people out there that said, actually, it's probably going to hit, you know, these levels, you know. And when it finally did hit the 60s and 70s and get very close to that 70,000 level, a lot of people up here, including myself, were saying just sell, you know, it's going to crash, right? And ultimately that's what we've seen. Very easy to say in hindsight, but there were people out there that were actually calling you know, this top to, you know, to kind of form, and the subsequent sell-off to happen before, way before it happened. You guys know I posted a chart back in January last year saying that Bitcoin was going to hit 20K, and it's purely a function of human behavior and psychology. It's got nothing to do with blockchain technology being special, changing the world, and all of this stuff that people keep rambling on about, because the reality is people move markets, emotion moves markets, not blockchain technology. Blockchain, you know, the cryptocurrency market, the blockchain technology that is used in cryptocurrency is nothing more than just technology. Ultimately, people are moving those markets, and big money, you know, is obviously still greedy. 500 years ago, 400 years ago, 100 years ago, 20 years ago, and now, yeah? You're always going to have greedy people in the markets, right, that are going to manipulate them for their own base ends, right? So we get this impulse to the upside, and we slowly start to see that ramp up. And again, we have to remember that at this point, there was a lot of people that were holding Bitcoin around about 10,000 to 12,000, possibly even 15,000 as it starts to ramp up. It goes. Now, there's your first distribution point just here. And we only need to see this on the we only need to see this on, you know, the monthly. We don't even need to go down to lower time frames. It's so obvious. You can see it, and you can see it clearly as well happening. So you've got the first distribution event just there, right? So profit takers. How do we know that there's profit takers? Very simple. You can see that price is dropping to the downside, right? So I'll get back to your question in a second, Rob. Excuse me. So We can see this clearly because there is a push to the upside. This was a strong full bullish monthly candle that was basically decimated. At least 2/3 of that candle was profit taking. You can see the distribution event. You can see the big tail. Let me just zoom in a little bit more. You see that big tail. But ultimately, people who are holding down here, very, very smart. They know, okay, look, I'm holding down here. I'm very happy. I've got no issues. And then ultimately as it goes up, maybe they take a little bit off here and looking for an opportunity to maybe add to their position. They don't really get it, so they wait. Now, the next distribution cycle is actually a little bit more aggressive. Yeah. And you start to see two things happening here. Really, really important. You see the ramp up of hype and FOMO, because look at the size of this monthly candle, okay, relative to the size of this monthly candle. Big difference. So you've got an 80% monthly candle, all right, and you've got a 50% monthly candle. So 50% and 80%. That is a big difference. That's an extra 30 to 31% of a monthly candle. You see the acceleration. You see that it's really starting to ramp up based on FOMO, hype, people jumping into the markets, everybody getting excited. This is going to be the one, and then ultimately you get that final push, or at least once you get that little bit of distribution. People down here, they're going to be taking profits, right? This is a big move. This is a big move, guys, right? You're talking in excess of or over 415%, on that move, depending on where you actually capture it from. But let's just say 415%. That is a big move, right? So ultimately, that distribution just there, as people start to take profits, big players start to take profits. There's always going to be people that are ultimately trading Bitcoin and people that are holding Bitcoin, people that are investing Bitcoin, people short-term traders, long-term traders, position traders, scalpers, and so on, right? So we've got a varying different degree of different types of traders that all have their own economy, right? Larger investors have a lot of money. Very few of them, though. Then you have maybe your scalpers who are basically looking to scalp Bitcoin, or day trade Bitcoin, or intraday, or maybe hold for 2 to 3 days swing trade. They have their own economy. They make up a select group of traders, who will have their own personal economy, and collectively that doesn't really move markets either. But ultimately, when they take advantage of these moves like this, what I'm trying to get at is their distribution, right, or their buying and the selling. So they accumulate and they sell. So when I say buying, accumulation. When I say distribution, I'm talking about selling or taking profits, right? And it works the other way around. So, for sure. But the point I'm trying to make is the day traders don't really change anything. They just don't. The intraday traders don't change anything. Swing traders, maybe just a little, but ultimately the long-term investors, right, who are patient and quite happy to just sit on large positions and wait for exit liquidity at the right moments, using all the tools available right now, bookmap, looking at the blockchain, looking at Bitcoin dominance, looking at all the technicals, all of this stuff, right, to their advantage to really take, people's money when that exit liquidity is there. And how do they do that? They start to ramp up the hype. They start to ramp up the FOMO. They start to use big players like Michael Saylor, Max Kaiser, some of these other players. We've seen Elon do it so many times. He needs some cash. I'll throw out a tweet. We get a little bit of a pump on maybe Doge or Bitcoin or something that he's talking about. He uses that as exit liquidity. There's absolutely no question in my mind. Forget that he's, awesome at what he does and that he's really changing the face of Twitter. The fact is he does this stuff, period. That's it. So going back to what I'm trying to get at, these distribution events, right, we're happening at a point where we're starting to get that capitulatory move where liquidity is drying up. The exit liquidity for the big players is starting to dry up. So they're out on this. Yeah. Over a 415% move. They're done. They're out. Anybody that's holding down here is finished. Then we get the first correction, big drop. All right. That drop comes in at 55%. Decent, right? Maybe we start to get some accumulation down here. We know we did. How do we know? We see it. Yeah. Accumulation pushes back up, accumulation pushes back up, accumulation pushes back up. Even at the time, Bitcoin is being accumulated here. 100% is being accumulated here. Then you get that second drive to the upside. And this is not capitulatory in nature, but it is the start of a trend reversal. And it's based on that secondary push, for sort of distribution at the top. Profit takers, that last hurrah, so to speak, where people are really smart, the big players, and they're saying, yeah, there's really no money in Bitcoin right now. Let's just wait for it to tank, and we're going to slowly start to drive prices lower. Then you see the next ramp up of negative news. FUD. Bitcoin, Bitcoin, FUD, 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 Bitcoin, FUD, Bitcoin, FUD, right? Big, strong correction. Big, strong correction, right? 70, that's wrong. That's way wrong. Let's do it like this. You know, you're talking about a 300-point drop or 300%, you know, I'm thinking 50 basis points, 300% drop, right? Pretty decent. So that 300% drop, then we start to see that secondary accumulation phase. Now, here's where it gets a little bit interesting, because as we're coming down, right, the reason that this impulse is so important is because that's the price where the first initial momentum driven move started from. And some might say, well, why the hell does that even matter? It matters because you've got to think about who's buying down here. Yeah. Who originally bought down here that profited the most from Bitcoin when it was around about 10 to 12,000? Yeah, it certainly wasn't retail investors. Maybe some retail investors or some influencers that are, you know, sort of, you know, in on the scene now and have made a lot of money on Bitcoin. Maybe there's a few of those, but the majority of that movement and the capitalization of this movement, right, was done by people who have a lot of money and a vested interest, right, in Bitcoin, or at least a vested interest in controlling Bitcoin, purchasing large amounts of money down here, right? And I can tell you this as well, right? Trust me when I tell you, crypto Twitter is rife with syndicates, yeah, that push price. You know, there's a lot of players out there, right, that will basically collectively have their own discords, have their own private rooms, have their own chats and so on, that basically move cryptocurrencies across the board. It's not just about Bitcoin, it's about all cryptocurrencies, all projects. You know, I don't personally know them, but I know of them because they reached out to me when I was talking about a lot of different projects in the last year, or at least last year, you know, and somebody reached out to me and said that, I'm not going to mention who it was or for those that were around the Discord at the time. And if anybody's not in the Discord, the link's in the description. For anybody that was around in the Discord at the time, if you remember, there was a particular person that came into the room that was panicking, and he started to really sort of, you know, post a bunch of stuff, and I deleted everything. And I said, look, DM me privately if you want to talk to me about your project. I spoke to that person in private, and that person told me, right, that he was personally being attacked. His project was being attacked by a syndicate that were going to crash price if he didn't play ball. He didn't play ball, you know, and you know the price of his project and the chart basically just went to shit. That's really bad. The point I'm trying to make, though, is that there are definitely syndicates out there, right, that push price and do these things. As such, when we see this drop and then we start to see this accumulation here, this accumulation phase right now is being driven, okay, by hype. It's being driven by FOMO, and it's being driven by retail investors, mid-term investors or medium-sized investors, and certainly not being driven by massive players. Why? Because they want it down here. The other thing that we need to take into consideration as well is fundamentally nothing has changed. I've said this many times. Globally, you have a lot of problems, you know, in the world, right? War could break out at any moment. And the reason I keep mentioning war is because it's a big factor in what's happening globally. And obviously, if that happens, no market is going to, you know, kind of not be affected by that. There is this common misconception, right, that if war breaks out, everybody's going to run to Bitcoin because it's going to be the only place left as a store of value. Absolute nonsense. People are going to run to gold, and it is tried and tested. There will be precious metals, commodities, something of tangible value. At the moment, and I don't care what anybody says to me, Bitcoin has no value at the moment other than its pairing with the USD. In years to come, and maybe this is the gamble people are taking now, maybe Bitcoin does have value. Maybe Bitcoin derives its value from being able to be used, you know, on a network that can't be hacked, that is decentralized, truly decentralized, and all the good stuff that we know about Bitcoin. But right now, that's simply not the case. And this is where the biggest problem starts. We are not in a bull run. This is not that moment in time, right, where this is the first rally from a bottom that is going to drive prices higher and hit 100K before the end of the year. Bitcoin may hit 100K before the end of the year, but it ain't going to do it off the back of this very small rally in a huge corrective downtrend that didn't rebalance. It needs to rebalance down here. It just does. So that's some take on, you know, on Bitcoin. Doesn't necessarily mean it's the right one, right? But I'm looking logically and objectively. Just as I was objective saying Bitcoin's probably going to run to 30 to 32,000. I'm not here to say I'm always right, and I'm not here to say that I'm going to stay bearish until Bitcoin hits this level and just keep saying that even when Bitcoin's at 500 billion. Like that's ridiculous. You have to be objective, and you've got to look at the markets right in that moment, collectively, with all the information that you have available to you at hand. Use all the tools at your disposal that are available. Listen to people who know what they're talking about. Really pay attention to what's happening from a contrarian point of view, in my opinion, and you'll get a much better idea of what this 4-month run actually means, as opposed to what people are telling you it means. It's a big difference, man. Big difference. So yeah, let me go over to the chart, to the chat, and take a quick look. And again, guys, don't forget to like the stream, share the stream. It really helps, man. Bigar, what's going on? Rob's saying, morning, Serge. Rob's saying, do you believe in the 4-year cycle? I do, and I don't. Let me explain. So generally what you'll tend to find is if you find a pattern in something, right? And whether it's a mathematical pattern, but generally we'll go with trading. So if you look at patterns throughout trading, right, throughout history as well, a great example is the S&P. The S&P kind of outperforms. If you just buy the S&P every year, you generally tend to do well over a longer period of time, right? This is just a fact. But you still get crashes, you still get turns in the markets, you still get sort of whipsaws, and then it's down to you as an investor, right, to just have the gall and the patience and the grit to just hold on to the S&P. And if you just do that, you just buy and hold and just forget about it, right? Then you'll generally tend to do well. But as a pattern, that pattern breaks sometimes, yeah? And this is something that I feel a lot of people continue to do, right? They're looking at Bitcoin and they're saying the 4-year cycle works every single time, right? And this is what we're going to see, and they post these little charts of the first 4-year cycle, the second 4-year cycle, and you can see that, and you guys have all seen the charts on Twitter. We see this over and over and over again. This low looks like this low, and this is going to be the exact same as the previous low. It's nonsense, because ultimately, although it repeated enough to say, okay, there is a verifiable pattern there, it does make sense. We can verify it, and we can see that it's happening over a 4-year period. That doesn't necessarily mean that this one is going to work as well. And I think objectively, because people can't get past that, that I believe in Bitcoin so much, and what it stands for, and all of these kind of maxes, and this kind of almost paganistic, sorry, I use the wrong term, not paganistic, I guess it is paganism really, but this almost cultish mentality of Bitcoin being the savior and we being its subjects. I mean, it's absurd, man. It's absolutely absurd. It's getting to the point of absolute insanity. And because of that, they refuse to accept that this 4-year cycle may not be the one that works. For example, the halving. The halving is a great example, right? Every time Bitcoin halves, it goes up. Does it? Does that mean it's going to happen this time? What were the conditions back then? Yeah. What were the conditions in the previous halvings, right? And what are the conditions now? Are people even paying attention to the conditions? Are we paying attention to the fact that China, although they keep saying, yeah, we're gonna attack Taiwan and this and that and the other, and maybe people are saying, yeah, they're just trying it on, they're just what? Who cares what they're doing? The fact is they're saying it. And if God forbid it does lead to war, right? Or if China does something stupid, or if the nations that are slowly starting to move away from the dollar to really sort of move away and fend for themselves and create their own economies and strong economies, if they continue to do these things, right, and America, whether by design or whether by the fact that America is just losing its power, regardless, if something kicks off, then we are in an absolutely different moment in time to previous halvings, to previous 4-year cycles, and so on. This is why it's so different. You can't look at technical patterns and say, okay, this technical pattern is going to repeat itself every time just because it's Bitcoin, and not take into consideration what's happening globally, regionally, nationally, and so on. You simply cannot do that. You have to look at all the factors and say, okay, I need to be objective about this, and I need to try to, I've got to try and put myself in the right frame of mind, so I'm making correct investment decisions, right? If you're just buying Bitcoin over and over and you're stacking for the next 10 years, it doesn't matter. Like, it just doesn't matter, because you don't care about the actual price. You're more concerned about the coin. If you're concerned about the coin and not about the price, it really makes no difference where you're buying Bitcoin, because your belief in Bitcoin has nothing to do with profit. You're a completely different animal, right? But when we're talking about big players, they don't care about the coin. The only time a big player, and I'm talking about people who've got billions, guys, right? The only time they ever care about Bitcoin, the actual coin and what it does and the decentralized nature of it, is purely if they can control it. That's it. If they can't control it, then they're looking to profit from it. Nothing more, nothing less. And the best way to suppress technology is to stop it, right, from moving. And the best way to stop it from moving is to basically control through shares, through companies, through, in this case, the supply, whatever it is, to control the liquidity of a project, to control the liquidity of a coin, to control the liquidity of a tech, giant, whatever the case may be. If you can control that, then you can effectively control its growth. That's the most important thing. So these are things that we have to take into consideration, I believe, and I think we have to be objective about the analysis that we're doing, and we have to make sure that when we're looking at things, that we're not letting our emotions, and I know they do. I've managed to control my emotions now over the last however many years, but I used to be a nightmare. I used to just buy stuff, and I'd see green and I'd see red and I'd get all crazy. But that's not always the case. At least now I've managed to kind of pull away from all of that, and I'm like, look, I want to make money, of course. We all want to make money, right? But what's my time frame? What does that look like? What's the global condition like right now? Things getting any better? Maybe in some small countries, I don't know. But I can tell you, over here in the UK, things aren't getting any better. I live here. Things aren't getting better. I speak to many people around the world. I'm so fortunate to have met some amazing people online. You guys sit with me for an hour, 2 hours, 3 hours sometimes. We talk continually in the Discord. The link's in the description below. Make sure that you come to the Discord. And we have amazing conversations. I know people from all over the world now. America, Europe, pretty much every single country in Europe. I know somebody who's there, who speaks to me or has spoken to me in the last 2-3 years, who's involved in crypto. I mean, that's amazing, right? And I get to listen to some of the stories about particular countries, particular regions, particular villages, some cities and so on. It's actually pretty amazing, right? And you do see small pockets of relief. You do see small areas where things are actually getting better, but the majority, of global economies are not doing that great. And we need to take this seriously, I just finished work. Glad to be here. Been a while, mate. Crypto Pants, what's going on, man? Good. I'm glad you're here. Serge, so major banks today are posting apparently great profits. Doesn't seem like this earnings season is going to be the one to crash things. Yeah, I mean, look, it could be a lagging effect. We could be seeing that kind of last hurrah, of banking being okay and just kind of in line with that perfect narrative that inflation is slowly becoming, under control, and we may pause interest rate increases and we can continue with our quantitative easing and blah blah blah, and then ultimately in 3 to 6 months time, maybe before the summer, maybe slightly after the summer, as we go into the fall, boom. I think this is going to be one of those times where I'm probably this year going to get so much grief. I've prepared myself for it. I've got my armor. I've bought a couple more hats as well. I'm going to buy a better microphone. The camera is absolutely unbelievable. Again, if anybody, does any live streaming or, likes to do kind of Zoom calls and stuff, and quality is important to you, get the Link 360. This thing is absolutely unbelievable in terms of quality. The only reason that sometimes it doesn't come through is because I'm using StreamYard and it only records in 1080p. And apparently the connection really matters, but whatever. Sometimes it's a bit cool. But, going back to what I was saying, in terms of this kind of lagging effect, I think this year is going to be the people who are being objective and realistic, right, and trying to keep emotions out of the equation, like myself, like Capo, like some of the other people that are on Twitter, who are you know, who really break things down and really go into the nitty gritty details. Data Dash, for example, another amazing Nicholas Merton, you know, Lobo, you know, knows who I'm talking about, as I'm sure many of you do. You know, great analysis. There's some other great YouTubers out there, content creators and traders, you know, who are putting out some amazing content, but we're being dwarfed by the hype. We're being dwarfed by the FOMO. We're being dwarfed by these lunatics who go online. And I am calling them lunatics because they go online and their only interest, you know, is to get followers, to keep pushing the narrative for their own base ends and their own personal, you know, personal gain. The point being is that I think the very small group of us, right, are going to have to go through this kind of really gut-wrenching, dig our heels in and say, you guys are so wrong, you know, and then ultimately one of two things is going to happen. Either it's going to be horrendous egg on our face, or, you know, we'll be able to say, I told you so. And that's not something that I personally want to say. I don't want to. I mean, think about how sadistic that would be to look back at people. I know we're going slightly off topic, but to look back at people and say, I told you so. That person's just lost money, man. I don't want to say that. I don't want to say that. I want to make money. Yeah. But what I do want to do is I want to try and keep people safe, right? You know, based on what I believe to be my experience, which is good. And I think the gravitation of, you know, common sense, you know, which is absolutely abundant in our Discord, the Invested Intelligence Discord, you know, really lends itself well to that. You know, I know Lobo's made some money on the markets, right? Even though he's bearish like me. You know, I know some other people in the, you know, in the chat. Serge is you know, he's an investor, he's a trader. You know, I say what I say, he says what he says, you know, and we kind of meet in the middle. I trade, I make my money, you know, I make some money trading, you know, Serge will make money trading, Lobo makes some money investing, trading, whatever. But we don't say, you know, I'm going to completely change my view, my strong belief, right, that the markets are going to get battered soon. You know, it doesn't change anything. You can still make money. But in terms of longer term, larger amounts of money generation or wealth being created, if you have the money to put into crypto or, you know, assets or whatever, you need to wait for a really strong opportunity. And right now, it's just not it. I really don't believe it's it. Interested to hear your thoughts regarding recession, hedges such as I'm assuming gold, bonds, etc. Yeah, so for me, what I'm doing is I'm watching commodities closely. You know, I am increasing my gold holdings, both physically, you know, which is becoming a little bit of a challenge because obviously there was a big rush, you know, for people to buy gold. For those in the UK, I mean, I use bullion by post. You know, they're registered in the Jewelry Quarter in Birmingham, which I know quite a few people down there. Just as a quick side note, if you want to buy gold, you know, and you've got the opportunity to actually go down to the Jewelry Quarter in Birmingham, you may be able to find yourself a better deal down there. You know, if you pay cash, if you've got some cash just kind of sitting there, might be a good opportunity to go down to the Jewelry Quarter. If you know, some places in London, Hatton Garden, some great places down there to go and buy gold if you can. But basically, gold, that's a good one. But again, a little bit difficult. Silver, not too bad. I'd stay away from, and I'm talking about physical gold, right? I'd personally, I don't know about, I'm not telling you guys what to do, but personally, I'm staying away from metals like platinum, you know, or white gold, because these don't really have any premium value, right? They're very expensive, you know, to make, or at least to produce. And gold, you want to be focused on coins. You want to be focused on bars less than 50 grams. You know, they're easier to liquidate. You know, avoid buying anything above 250, you know, to 500 grams because they can be messed around with. If you're using bullion by post or some reputable brokers, you know, you'll be fine. But really, really sort of high-end gold bars, sometimes you may get duped because they take the weight, you know, and basically put, you know, other metals in there and then kind of cover it up with the gold, and the weight's perfect. It looks great, and in some cases can actually pass gold testing machines. Not always, but can pass gold testing machines. So gold, commodities, I am keeping an eye on wheat. I'm keeping an eye on soya. Also keeping an eye on orange juice, these types of things. Pork belly's not really interested in, but basically the major ones for me are wheat, and soya, because both are used massively, you know, in global markets. And then as we basically start to move towards what I feel to be, much harder times going into the summer and the fall and towards the end of the year, at least the later part of 2023, I think we're going to start to see a spike in commodities, right, as demand kicks in. Gold will probably peak out around about 2.2. If that happens, we may see a bit of a pullback on gold. But in terms of holding over a longer period of time, gold has, intrinsic value. Gold has actual value because you can hold the physical gold. And that's definitely, for me, one of the best hedges. I'm not saying it's the only one. I'm not saying it's the best one. I'm saying it's one of the best hedges, right? And historically, it's proven itself time and time again. I won't be holding currencies. If I can avoid holding currencies, I will. Custodial tokens that can be backed, tokens like Tether Gold, Pax G, these types of tokens, again, not a bad idea. But again, if you can hold the physical gold, if you can buy the physical gold, much better. And then just going back to coins, stick to Maples, Eagles, and Cougarangs, and Britannias, those four. Yeah, Cougarangs are probably your best bet, and the Maples, so Canadian Maples, which are basically 1 troy ounce coins. Amazing. Yeah, if you can get your hands on those, they hold it. They hold a slightly more premium. So basically, if you buy them at a decent amount, let's say you have a large amount of money to put into gold, and you buy yourself maybe 10 coins, Maples, or 5 coins Maples, you'll get a slightly better price because obviously you're buying more gold, but they're much easier to liquidate. Yeah, and they will hold their premium. Dip in and out. Yeah, exactly, Lobo. Dip in and out, man. Just like snipers. Boom, 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 boom. You know what I mean? While we're waiting for that big one. I took puts on S&P for October OPEC 6 months out. I did it. And I did it. I think unemotionally. It really seems like this is all euphoria, but there's a clear case that the underlying says things are bad. Absolutely, Serge. Absolutely. And I think one of the cases to be made here is, if we try to make the bullish case, so you've got 2 scenarios, right? You've got the bearish and you've got the bullish, right? And I've said this before. The case to be made for bearishness, right, is actually very, very, very easy. You can make so many, you can bring so many examples, so many things that are happening globally, into the mix and say, yeah, this is so obvious that it's bearish. But you can't do that from the bullish side of things. It's very difficult to see globally, many examples or many things that we can bring to the table and say, okay, these are all the elements, right, that are, giving that bullish sentiment or that bullish case. There is no case for the bullish sentiment, for the bullish, next 3-year sort of bullish run. I don't see the case for that. If we were in court, the bulls would lose. Yeah, the bulls would lose. In closing statements, the judge would be like, all right, let's go to the jury, and the jury wouldn't even have to deliberate. They'd just be like, jail. You know what I mean? Jail for life. Bulls would get destroyed because there is no case to be made for the bulls at the moment, other than hype, FOMO, and the promise of everything's going to be great. And we know what promises do. Used retail sales, USD retail sales came out today, and wow, it's bad. -1%. My God, my checkout Forex Factory. Let's take a look, man. Yeah, -1. Just as a quick side note as well, if you guys just click this little thing, it tells you change in total value of sales at the retail level, actual greater, blah, blah, blah. I mean, I just ignore the usual effects and everything else, but and I've done this from time to time. When I first started using Forex Factory, the calendar, if you just click on the little folder, it tells you, what it actually measures. So the actual number that you're looking at. So for example, core retail sales, if you click that one, it says a change in total value of sales at the retail level, excluding automobiles. So it's just a little snapshot or a little kind of description, for those that aren't familiar with what most of these are. CPIs are, is obviously a big one. Change in the price of goods and services purchased by, consumers. Big deal, because ultimately consumers are what drive economies, or consumers are what drive economies, and so on. So yeah, just a little tip there. But yeah, that's not good, man. And although I don't claim to be an expert in numbers, and fundamental data, I am an expert in going into a shop and seeing that price has gone up 20%. Right? I think we all are, right? You go in and you're like, why did I? My wife came home the other day and she was spivving, man. I'm like, what's the matter, man? I thought somebody basically cut her up in the car. I was going to go and jump in the car and kind of drive around with my Thor hammer, right? But she's like, I can't believe I've just bought four donuts, you know, Krispy Kremes from Tesco for £9, £9.50 or whatever it was. You know, normally you get like 12. You know, you get a box of 10 with 2 extra, whatever it is, for like, you know, $8.60 or whatever it used to be, you know, 6 months ago. And now it's like £9 something, yeah, for 4 donuts. What on earth is that? You know, we are all experts in that. This is something that we can all attest to, right? We are amazing at being able to see our money, you know, leave our pocket very quickly. So that's what we need to focus on. Yeah, the interesting thing about CPI is this is the first time that core CPI is above overall CPI, and I called this 4 months ago. Yes, you did. Yes, you did. Yep. For anybody watching this video later or a later time, not live, you know, Serge posts a lot of information. Lobos posts a lot, you know, a lot of information, you know, in the Investor Intelligence Discord. Links in the description below. It's really, honestly, you know, like we're always trying to stay on top of these things. That it will meet and do this. Of course, CPI is going back up. Yeah, I mean, you know, again, we're not. Yes, I will. And I'll explain. Yeah, I'll explain that in a second, Nordic. So I'm sure most won't know what that is. But you know, for me, like I said, I look at all of these variables and I'm like, what is the end result? Yeah. If we look at all of this data, where and how and who does it affect the most? You know, the where, globally. You know, the how, your pocket, right? And who, everybody. That's the end result. So if the end result is that everybody's being affected, you know, through their pocket money, you know, and that's global, how is this going to end well? We need a correction, guys. You know what it really boils down to? We just need a flush. We need capitulation. This is death by 1,000 cuts. This is slow. This is methodical. This is manipulation at its finest. Yeah. So we'll see how it all pans out. So Nordic's asking me to go through this this chart, you know, point 1, 2, and 3. So basically what I did, I was talking about, I'll just go over to Twitter. I was talking about this chart here. So basically, and let me just make sure that you guys can see that. Okay. Yeah, fantastic. So on this chart, I was basically saying minor impulse, rebalance point, heavy liquidity. So, you know, the way that this chart is formed, you know, you have this kind of impulse point down here. And I don't know if you was here at the beginning, Nordic, but I was basically saying that price to rebalance completely, yeah, and these big players to step back into the market, you know, they want price between 10 and 12,000, right? And they will do anything to get it down there. And as price is driving higher here, this number one, right, in terms of minor impulse, if you look at the way that price basically dropped just here, goes up, and then you get that reversal, right? Excuse me. You've got your first impulse here, which rebalances, yeah. So basically it's like a stop run, you know, albeit a very messy one. You got a little bit of participation down here, you know, as people start to slowly, you know, come back into the market. But again, it's nothing, you know, nothing to shout home about in terms of volume, you know, or size. And then it slowly starts to slow down. You get that secondary impulse here. This one is a second, or in this case, a third impulse, but it's a minor impulse because it's hitting liquidity. So all of this here, this here, this here, right? So the 30,000 level, it's a massive psychological level. You know, people take profits at 30K because it's the big one or a big one. You know, people buy at 30K because they believe it's finally got back to 30,000. It's going to keep going. You know, it's a huge, you know, psychological number. We can clearly see that defined in the chart, you know, here, with all of the accumulation that was done here, with the accumulation that was done here, and then obviously here with the distribution as it started to drop, and accumulation to the short side as well. But it got a little bit messy here with that final drop just there before you get that secondary drop here. So, you know, it's a big level. It's a big level, but it's only a minor impulse because it's hitting all of this. You know, it's not a fresh, new impulse, bang. Yeah, that's not what it is. It's kind of a dry up of, you know, liquidity as it goes into this kind of very lethargic, I'm just, you know, kind of reaching to get to the finish line. Yeah, and it finally gets there. That's what this is, a minor impulse. Number two is basically this area up here. You know, I was saying that kind of rebalance point is, and I don't know if it's going to get here, but if it does, I would expect a little bit of sensitivity here, or at least, you know, some stave off and a, you know, a pullback, you know, sort of going towards 30k and sub 30k. You know, it's that kind of crossover point where imagine prices being sold, right? Well, I'll tell you to the upside because it's a little bit harder to explain from the short side. But let's say, you know, you're buying, price starts to go up, starts to go up, and then you've got this kind of break in price where, you know, this kind of indecision, don't know what to do, and then bang, just get this huge flood of orders that come into the marketplace, right? That's what this is here, right? So when price finally gets back there, there's so much market participation here, or at least trying to explain this properly. There's so much violent market participation at this point, and we can clearly see it. It's not hard to see. You get the drop, it hits this level, right? There's a lot going on all the way across here like this, where I'm trying to make the square with the, you know, with the cursor. There's a lot going on here. There's a lot of people that are still here. There's a lot of people that, you know, make decisions based on, I bought here, I'm back at break even, I'm going to sell. You've got short squeezes, you've got people buying, you've got people selling, and all this stuff. We can see it with the wicks. So as price pauses just here, and then you get that second move, and I believe we're looking at the daily chart, right? Yeah, we are. So when you get that next stage just here, you get that impulse, you know, that is driven by violence. Yeah. And then it drops. So when price gets back there, all of that violent participation, right, you know, is people taking profits, people taking, you know, their positions off at break even, anybody that went short. So you might get that final short squeeze. And this is why I'm saying we should see price sensitivity, or a little bit of price sensitivity at number 2, because of this violent participation, right? You've got to remember, not everybody's buying and holding Bitcoin. People are shorting Bitcoin. People are trading Bitcoin. People have stops and so on. So when we get back to number 2, if we get back to number 2, roughly around about sort of 35,000 sensitivity, a little bit of craziness, a little bit of violence, a little bit of volatility, you know, that if a lot of people cover their shorts, you get that short squeeze and it hits number 3. Right? Doesn't necessarily mean it's going to happen this way, but that's what I'm saying, because that heavy liquidity at number 3 will basically be that final push into, you know, the heavy liquidity that's up in this area that caused the first initial impulse in the first place. And I know I'm talking fast, and I know, because I'm trying to think of the best way to explain this, because for me, it's a very familiar understanding of what I'm talking about, because I've done this for so long. But to try to explain that, you know, is anyway, look, there's 165 videos on my Patreon. If you want to know, just go over there, because I can't be bothered to. It's so hard to explain. But the point I'm making is, it's the impulse. Just like this one here, this is the biggest impulse. There's one here, this is the biggest impulse. So if it gets back to number 3, there is a lot of liquidity there, and you will start to see people basically selling, right, or covering their positions. But the drive into number 3, if it happens, okay, and I'm not saying it will be based on number 2 short covering or short squeeze, boom, right? So I hope that helps. Let's get back to the chart. Cool. And yeah, so I think we're good, guys. Yeah, we've been going on for about, what, 52 minutes? Decent, nice live session. I'm hoping some of the things that I went through today, you know, are, how you doing, Hal? You're right, mate. I hope some of the things I went through today, you know, are informative. I hope you guys learned something. Obviously, I'm going to continue to stay on top of the markets. I keep saying it. Come in the Discord if you're not already in there. You know, and we'll try our best to, you know, keep abreast of everything that's happening in the marketplace. Keep abreast of, you know, what could potentially be unfolding over the next 2 to 3 months. You know, and we'll do our best to, you know, to try to jump on streams like this and, you know, kind of talk through things, try and make sense of the madness that is cryptocurrency. When do you think the dollar is going to start crashing? Well, the dollar is quite happily making its way to $100. Now, I've had a little bit of relief. You can see this, right? But obviously, you know, it came close to this low, small amount of relief. We may very well go through parity at some point, but to be honest, you know, for me, I'm more than convinced, you know, that we are going to be seeing, you know, $100 on the dollar. No question about it, as far as I'm concerned. And then after that, you know, we will have to assess. But in terms of, you know, in terms of it starting to crash, that happened probably on a distribution cycle back in 2022. Maybe a little bit earlier. I mean, if we kind of look at this on the way up, yeah, You see this up here, sort of like the tail end of 2022. And then obviously we've seen this sort of decline in the dollar. But you've got to remember, if you look at COT data, which is Commitment of Traders report, right, and what's been happening with the dollar in terms of, institutions moving money in and out of, and we're talking about the commercials, not non-commercials, right? So commercial money, moving, which is basically just huge money. What they were doing on this move up, they started to increase shorts on the way up and reduce longs. So as they're increasing shorts and they're reducing longs, it gives you a very good indication, right, that the ratio of long and short is increasing on the short side and slowly becoming out of whack until eventually they start to take profits. They start to see that happening, and they look at global trends, all this stuff that they look at. And then ultimately you start to see the falling off of the dollar. And then obviously as it's coming down, they start to accumulate. And again, you see that ratio changing. The balance of the scales goes one side, but that happened on the way up. So I'd say sort of mid 2022, somewhere around here. And I'd have to go back, to be honest, because just Commitment of Traders report, aren't always easy to read. People just look at them and say, oh yeah, look, longs are increased this week, because the report comes out every Friday. You have to know what you're doing. You've got to basically track it over a longer period of time, not just look at one single report and say, okay, longs have increased, I'm going long, just because big money's coming back into the market. So to answer your question, Hal, this has been happening for some time. There is no when do I think the dollar's going to crash. It's more of when do I think it's going to stop crashing. There's a big difference. To kind of answer that question is not easy, but we look to liquidity based on what we're seeing on the chart. Where does it look like there is, a large amount of liquidity? 100 to 90, between 99 and 100, there's going to be a level where price should start to stabilize, and then we can kind of take it from there. But in terms of rebalance point, just as a quick rough, probably here, which basically puts us at 97.50-ish, give or take. But yeah, this is an impulse. This is a fresh impulse. We will see $100. Right, cool. So I'm going to leave it at that, guys. I hope everyone has an absolutely fantastic day. I've got a lot going on for the remainder of the day, so I probably won't be around much. I'll still have my phone, so if I see something interesting or if I see something that is, that needs addressing, obviously I'll answer that. But with that said, like I said, have an awesome day. I'm around in all the usual places, and I'll speak to you guys soon. Ciao for now.